Alrighty, people, I'm going to walk through the trade. What was the date of this? 16th, so last Wednesday. This is a 1 to 3. It only ends up running, I think, 1 to 4. But I'll walk through the reasons for the trade. This is against current market momentum, hence the 1 to 3. Yeah, managed correctly, and we kind of move from there. So basically, on the 4 hour, jump in and have a look, we have ourselves a major inducement. Now, like I tell you guys, is when you get a major inducement, the market isn't going to just tap and reverse. More than likely, it won't. What it'll actually do is it'll take its time. So everything kind of has that cause and effect approach of you've taken major liquidity, it's going to now need to slow itself down, and then it'll take medium liquidity and then it'll run. Okay, that's kind of the approach. So given that approach, we've had that major inducement, we've then pulled down, had a medium inducement. Obviously news kind of pushed this thing, but I more or less see as the medium inducement. Only reason being is news was necessarily the reason for this medium inducement, but we're getting that slowdown of momentum, which is the key part to basically what's happening. And that means that the market is building liquidity in both directions, and we can target whatever direction we want to target first based on those inducements. So given that that's the case, I'm going to use this as my medium inducement. Now you can, like I said, use this as your medium inducement. Either or is fine. I'm just using the news wick. We did have this pull down and take of liquidity here. So for me, that was a good enough medium inducement and kind of where the market decided to start flipping. So what you're getting in the opposite direction is you're getting inducement low, push. Inducement low, push. Okay, this is the first time you did not get that inducement low and push. Okay, so what that's telling me is there's a market reversal, chance for a market reversal, and it makes sense with the context of major, medium inducement, and so on and so forth. So now let's read 15-minute what the go is. So obviously you've had this take of liquidity here, which has given you this really, really clean point in here, like so. And then you've obviously had this, which led to the high. The next take of liquidity, which was this one here, did not lead to that high. So for me, this is kind of my demand on my 15-minute in which price ended up coming towards. Given that this demand did create that high, you can expect it takes the first high, which it does here. But let's read in the opposite direction what's going on. So we've obviously got this take of liquidity here, which leads this demand to here, then breaks this high. It does not break through this external high here, so more than likely this area will be treated like a smart money trap, which we get here, like so, with this inducement. What does this also induce into? It induces into the mitigation. Okay, now the reason I treat this as a valuable supply to trade out of is you've got push, pullback, push. You've got a medium inducement into the mitigation, which is enough for me to treat that as a version of supply. Given that this demand as well did not break the high, like I said, doesn't have enough juice to do so, I'm going to treat that as a smart money trap. I'm expecting price to push itself off, mitigate something. What it ended up doing is actually taking the inner liquidity here, mitigating that area and pushing down to give us this break here. Okay, beautiful. So now this has taken a medium inducement. Obviously this price did create a 15-minute break to the upside, which means we did get our medium inducement here. This is just me reading both directions of the market. Now, given timing, you could have looked to buy here, given timing, you could have looked to sell here or sell here, etc., etc. But given those things, let me put this on the bottom. We kind of know that the market now is more than likely returning bullish. Okay, it looks like what we've done is we've created that complex pullback. We've had that complete retracement into the mitigation of our extreme, and now we're going to get this follow through. Now that is actually what ends up happening. So that is just really, really good putting that together. We've got liquidity targets, etc. to target, but we know when we get 15-minute breaks, we have retracements, and those retracements create internal liquidity to create more traps in order to buy and sell from. So understanding the generation of liquidity, we use timing to kind of work out where the market is going intra-session, what the inducement of the session is. So at the moment, this is the inducement of the day. Okay, it's the start of the day, and you've kind of pushed up the raising session. What we've then done is we've come in and induced both of these highs. So for me, these are just relatively equal highs. I'm just going to use them as equal highs. I'll mark them out. But if we kind of read into price action what the go is, we've got this point here which created this push here. What happened internally? You've got obviously break and push. This did take 5-minute retest, push, mitigation, push, take of retest, which now gives me my unmitigated supply that sits in here. Okay. Keeping it very, very simple, just following 15-minute structure, understanding where the market can reverse from and reverse to. What you've also got to understand is where is liquidity being built up. So if we've induced low, we're going to keep buying until we induce high. That is basically the approach and how you want to treat it. So now we've come up, we've induced high. We've had our medium inducement, which for us is the inducement we like to trade from. We've had our medium inducement. This for us now, we can now look for sells. We necessarily don't want to look for buys until we induce something, okay? Induce high, sell, induce low, buy. Exactly how it goes. So we've now had both of those inducements. We haven't mitigated this and we're just on timing now. So we're a little bit early as well, which is beautiful, but we're trading in between this supply and this demand, okay? As we know, momentum is on the side of buyers. We are in a buyer's market at the moment, so we can kind of expect that buyers will continue to do what they're doing. I also see this as a good take of a point as well, given that this point here was take of a retest that created this. So this medium inducement to me is actually more than a medium inducement, and I treat it as such, being that it is a valid supply point. We have taken a valid decisional point that took internal retest that created that break of structure to the downside, okay? Now, this is all internal breaks of structure. We haven't broken anything external, so that's how we know buyers are still kind of the go and the outlook for the session. What I can do is I can kind of change this now for the outlook for the session. But given those things, we can kind of add those together and go from there. So straight down to the 1 minute, and all we're looking for is to see that change in control. So here we've got that bigger two leg. We have nothing to work off here. So given what's happened with the inducement, we've got an inducement of trend line here. So now I am unsure whether we're inducing low to push high or if we're inducing high to push low. So I now need the market to tell me what it's doing with the inducement of liquidity here. So that's where we wait and we see what happened. Okay. Now, an extra little confirmation I used that this was doing what it was doing is if we jump on the 5 minute, we have internal break and retest here. Now, what do we know about internal break and retest, or just break and retest in general, is the point that it reacts off of is a smart money trap. We know that retest is a point that'll invite people into the market, and then we're using that to generate liquidity and then go from there. So basically our 15-minute entry model, medium inducement, smart money trap taken out, entry. Okay, that's kind of how it goes. So we've got our smart money trap taken out. This also did generate liquidity on a lower time frame now, which we've taken out. So we've induced low to push high. We've now induced high at the time of open, which is perfect. We've induced high into a mitigation. So we've got medium inducement, smart money trap inducement. We're inducing high to push low for the first time in this little market movement. We've got daily cycle, we've taken Asian highs, we've got Asian lows. The only thing not on our side is the momentum of the 15-minute, which is currently bullish and we know is going to be bullish. So that's where our invalidations kind of come in. So we know that this point here is more or less a retest of this 15-minute break too. So our weak low is this target here. You can also go with the objective outlook of this point outweighs this point and kind of look at it like that, but we'll manage it how we need to, okay? So now we can obviously come in here and have a little look. I'll copy this here because now we've got a new inducement that we're looking at. Now we basically want to look in here and work out what the go is. So we've got break, retest, and push. So we've got a very, very small internal break here. So what do we get? Internal break. Done. Now, this is where you can go ahead and set the limit. The limit is valid now. For me, I wait for that second confirmation. You've just got to understand with the second confirmation, what will happen is once you get that break, so you've got obviously this here, you've got break, you get that second confirmation. On the second confirmation more or less won't take liquidity. Not all the time. What it'll do is just fill the imbalance, hit an institutional point of some sort and go. That is more or less how you get impulses out of a point, and where you get change in directions is you'll get break, it'll then push and give you the second break or the second confirmation, whatever you're looking for. You'll then fill imbalance and go. And that's why you'll find I set it on the break rather than targeting individual points. So this is kind of the approach I took here as well. So we get that second confirmation. Now we've got to wait. We'll get that first confirmation. We've got to wait for that second confirmation. Nothing yet, nothing yet. Here we get equal lows. So for me, I'm still not setting this limit. This is not a good enough thing for me. Cool. What's happened here? So we've got our break. This did break. what's price done in the meantime? It is internally induced into this break here. So what have we got as our entry confirmations on this as an objective standpoint? So we have internal break into a 2-leg into a break. So we've got break and 2-leg, we've got 2 breaks, etc. For me, this is not a break and retest. I don't see this coming any higher. As you can see here, if we follow price, we've got obviously the mitigation of this point here, fill in balance. We've then mitigated the rest of this point with the take of liquidity and push. So for me, this is my last inducement. If price is going to respect sellers in control, it's going to stay below this point. So that's exactly what I had. So I had this here and my limit was off of the break. So I had this set like that for a 9.5 pip stop loss. And then I was targeting my 1 to 3, my generic 1 to 3, which sits about here, I believe. Understanding that I will go break even once price tells me. So from here, price pushes itself up. It actually mitigates this point perfectly. So this is something I journaled in the trade. I could have easily reduced that stop loss a little bit, but for me, I'm more focused on getting in the trade. Once we get that, and like I explained before, it's going to fill in balance, hit an institutional point and go. It's not going to take liquidity, especially in an instance like this. Okay, we've now pushed down. I'm now looking for something to cover me. Okay, I need something to tell me that this isn't happening. You can also set the limit here. So this is the next limit now. You've got break, 2-leg into a break, break and retest, push. You've now got a protected inducement. You can go ahead and set this. This is a valid limit you could set for a 1 to 3 here. For me, I'm holding my entry here. You would have got tagged here, but it's equal lows and then random news drop. So when the random news dropped, I went break even. This was just like, I think it was yellow folder or something. It wasn't even red folder. But what is this telling me? You've got inducement, sellers in control. That is what it's telling me, which lines up with everything we were doing. Like that, break even, 1 to 3. Okay, very, very straightforward and simple. Medium inducement, smart money trap, take of liquidity, timing, mitigation of a 15-minute point, 2 confirmations in following inducements for the break-even protocol on this one. Very straightforward and simple there. So what ends up happening is I believe price pushes itself back up. Like I said, we're in a buyer's market at the moment. Generates liquidity, comes and takes that liquidity, and then kind of moves off and is gone like that. I think it goes now. So like that. Okay. Any questions? Let me know, and we'll go from there.